Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and we're getting an update today from Jayant Bhandari, private investor in the resource space, consults a lot of high net worth investors looking at the resource stocks. And Jayant, always great to get your thoughts on the show. Just to take a look at some of the opportunities you see on the radar. We were talking off mic just about the gold price holding up pretty good, above 2,400. Honestly, it was just at an all-time high recently. So compared to a lot of the other commodities, gold itself doing well because of a host of different macroeconomic factors. But the gold stocks are very much a mixed bag. And so there's some opportunity mixed with difficulty. But as far as the opportunities, you're always looking at different arbitrages, possible transactions going on in the space. One we were talking about that I've, in full disclosure, I've taken part in as well is the Florida Canyon Gold. It was really a spin out from Argonaut Gold. Argonaut being taken over by Alamos for its Magino asset, and then spinning out its Mexican and Nevada assets into Florida Canyon, that then had the Mexican assets bought by Heliostar, and now Integra Resources is making a move on the Nevada Florida Canyon mine. What do you make of this transaction, and what do you make of the opportunity still there in Florida Canyon?
Thanks for having me, Shad. I used to own Florida Canyon because I got it as a spin-off from my merger of shares, Argonaut Gold shares merger with Alamos. And I sold my Florida Canyon shares at 65 cents or so. But now I have been a continuous buyer since then because Integra Resources is acquiring Florida Canyon. And there is currently a 12% arbitrage in owning Florida Canyon, but there's a 33% arbitrage if you consider Integra to be worth $1.35, at which they are doing a bought deal financing. So I feel very happy acquiring Florida Canyon again at 48 cents, which it is trading at today.
You're pretty good at looking for these opportunities to pick up the arbitrage difference between where the company being acquired is and where the company doing the acquiring is. Now, if you see that narrow, if you were to see it narrowed from 12% down to, say, 2 or 3, closer to the transaction, would you then exit the transaction and just take the profit, or would you hold on to it to let it convert over to Integra?
Well, I might actually exit my transaction at that point of time, but before I started investing in Florida Canyon, I looked at the financials, and it seems to me that Florida Canyon is a profitable mine at the current gold price. Now, this project should not have come into existence in my view, but now that it is constructed and producing, it makes a lot of sense in a situation where oil price is falling and gold price is increasing. You actually have an increase of profitability as this happens. The project was cash flow positive in the last quarter, and it will be even more cash flow positive this quarter. In my view, Florida Canyon company fully justified its share price based on the profitability it was facing in the last quarter. So I'm very happy being invested in the company. And I think this new financing and the fact that I will get further upside from the merger with Integra gives me a good baseline to invest at. I also think, Shad, that, and I don't know how GDXJ works, but GDXJ, because of the merger between Argonaut Gold and Alamos, is left with a lot of shares of Florida Canyon Gold. This company is not and should not be a part of GDXJ. So I'm not sure how it works. Are they selling their shares? And if they are selling their shares, that might be suppressing the share price. And that is an opportunity for people like me to acquire the company. But also big shareholders, big funds don't like to hold on to smaller companies like Florida Canyon. So they might also be selling. And again, this is an opportunity for me to buy such a company. Whenever mergers between two big companies happen and a spin-off is a small company, retail investors usually benefit from buying that small company because the big fund managers don't like to hold on to small penny stock companies. And that's where you can actually make some good money by investing.
Well, and we've been following on the show this Florida Canyon asset forever. We followed it when it was with Rye Patch before they even got it developed into a mine. Then we watched it go over to Alio, and then Argonaut took over Alio, and they had a tough time with it at the beginning, but they did get it turned around. And we just interviewed Jason, CEO over at Integra, just last week, just asking him about it. And he says that, this is really going to fund their operations as far as all the exploration and development work at Delamar and at their Nevada gold project. It's basically Wildcat and Mountain View that Millennial Precious Metals used to have. So this gives them an ATM machine as a company. Would you be tempted to hold it to see what Integra could do with this asset now that it's been optimized by Argonaut, or do you think that it's just better to cut bait and move on?
Oh, no, I fully agree with that statement. Companies in the development phase suffer because the market knows that these companies would keep coming back to the market to raise money. But based on the financials, it seems to me that Integra can probably avoid raising money for the next several years, and that will give them a good situation in which their share price will likely continue to improve.
Yeah, it's going to be interesting to see it play out. And full disclosure, I'm an Integra shareholder, and I was a Florida Canyon shareholder, but I did sell out after the announcement that they were being taken over. And now I'm realizing maybe there's an arbitrage for me to look at closer. So I appreciate you bringing it up for our listeners. Another transaction we've been following has been the kind of cat and mouse game going on with Silvercorp and Adventus, but I think they finally got it worked out where Adventus is now being acquired by Silvercorp. And that's a company that's a Canadian company operating in China, now diversifying into Ecuador. What do you make of this deal? Is there any spread here to still capture? And do you like this transaction?
Today, Shad, Silvercorp announced that they now have construction permit to go ahead with the project in Ecuador. This is a very good grade, high grade project, fully financed to go into production. Silvercorp is a cash generating machine. So they don't really have to go to the market to put this project into production. Also, Chinese companies have been operational in Ecuador for many years. So I wouldn't be surprised if Silvercorp, which is actually backed by Chinese management, is able to access some of the Chinese skills to get this project into production quite fast. Also, Silvercorp retains a lot of skills they have in-house in Ecuador, which is Salazar is still there, which benefits from this project going into production. So Salazar, which is, from what I understand, well connected in Ecuador and also a 25% owner of the project, benefits from making sure that the project moves forward smoothly. Also, Silvercorp will retain the team that is coming to them from Adventus. So I think this is in a very good situation. The share price of Silvercorp has fallen quite a bit over the last few days, which doesn't make any sense to me because the combined market capitalization probably is just about what the market capitalization of Silvercorp was before the merger happened. So I'm in a way at the current share price of Silvercorp, I'm getting Adventus for free.
Yeah, it's a good point. And it's an interesting transaction in the space. It also just kind of speaks to jurisdictional diversification that some producers are looking for, and the focus on South America as an emerging jurisdiction where certain areas like Peru, Chile, you could argue Argentina, and even Ecuador are improving compared to where they've been historically. So a little bit more action there. I'm going to throw in a wild card here. We were talking about another transaction going on in the oil and gas space that's also a potential arbitrage trade, and that is Hess in a tug of war with Exxon and Chevron. And I was under the impression that Chevron already had sealed the deal. You were mentioning to me off mic that there's still a right of first refusal that Exxon has. So maybe walk us up to speed because we do follow the oil and gas space. What's going on with Hess and that merger?
So Hess has this massive project in Guyana in South America, and they have a joint venture with Exxon on that project. Now, the joint venture is of Hess, but Hess itself is getting sold to Chevron. So from my view, Exxon has no influence on what happens between Hess and Chevron because Hess as an entity is getting sold to Chevron. But Exxon doesn't think that way. It thinks that it has the right of first refusal on Guyana. And if Hess gets sold, Exxon should be able to decide whether it can acquire the full project. The problem is that you don't really have an independent valuation of Guyanese project happening because of this merger. So this is creating some legal problem. And in my view, the arbitrators should go in favor of Hess and Chevron deal, and the merger should go ahead, there is a 12% arbitrage in owning Hess Corporation that way. But Shad, it doesn't really matter to me. Even if Hess goes to Exxon in some way, I still make the same upside irrespective of who actually owns Hess Corporation. So I'm ambivalent about it, but I still think the deal will go through with Chevron in about a year's time, and there's a 12% arbitrage in that.
Yeah, the 12% arbitrage is nothing to sneeze at. And that's a major transaction in the oil and gas space. And so we've seen a couple of those recently. We've even seen Exxon already do a big merger last year. So just nice to see more in M&A. It gets the money circulating. It gets people speculating about who could be next in the takeover on the menu. And another company we've talked about that it's kind of got its own arbitrage, even though it's not part of a takeover merger, just based on how the financings went, is Aztec Minerals. We have Simon on the show quite often. We like the company. We like the exploration plan. They have a project in Mexico, another project in the U.S., one silver, one gold. What do you make of the value proposition for people looking at Aztec now as someone that I know that you are a shareholder in the company?
Yes, Shad, the share price currently is 14.5 cents Canadian. And I think it's an extremely good price to go after. I am actually accumulating at 14.5 cents. The problem is that the company did live financing, and live financing is something I don't really like. I expressed my displeasure to Simon about it. I quite like Simon. I like the project. But the problem with live financing is that those people who participate in the financing tend to sell their shares and sit on the warrants. So there are a lot of shares available at 18 cents, but 18 cents would still be a 25% upside from where the share price is today. So I would be happily acquiring at 14.5 cents and then decide as the project moves forward. The company now is thankfully financed enough to do a lot of drilling over the next 1 year, and they don't have to raise any money over the next 1.5 years. So in a way, this is a blessing for the company that they are well financed in a market situation where raising money is virtually impossible. So very, very excited at 14.5 cents share price of Aztec Minerals.
Yeah, it gives people looking today an interesting chance to get positioned, sometimes below where some of the people in the financings got positioned. But speaking of life financings and just how hard it is to raise money in the junior markets right now, we've seen people do the traditional flow-through financing, and we get some of the same complaints that a lot of people get into flow-through financing just for the tax benefit. They don't even care if the company executes on their plan or not because they're just in it for that benefit, and they often sell out afterwards. The life financings, people sell immediately. There's not even the 4-month wait. Do you think that because of the desperation in the junior mining sector that companies are kind of forced into these financings to keep the lights on? Would you avoid companies doing them, or would you be looking for, like we're talking about, for opportunities to jump on it post-financing and maybe get companies that get beat up because of it?
Well, that's the way to do it. I wouldn't like to participate in companies that are doing live financing. I would have actually given money to Aztec were they doing financing at a higher price and were they doing non-live financing. I just don't like live financing because it attracts wrong kind of shareholders. Now, a lot of shareholders are not wrong kind of shareholders, but the people who are interested in live financing, the reason you do live financing is because you are getting shareholders who want to clip their warrants and sit on those warrants. That also creates another cap on your share price. So I simply don't like live financing. I think if you are getting a discounted participation in private placement, you should be able to withhold your shares for 4 months, or at least you shouldn't get the warrants. Or if you still want to do live financing, it should be a small discount to the share price before declaring the financing. But again, Shad, I'm talking about it as an investor. I also understand that managements face a different kind of pressure. They have a pressure that if they don't raise money, they might go bankrupt. They have all those kinds of pressure on a day-to-day basis. So I'm sympathetic to their pressures. I expressed my displeasure to Simon, but I think that at 14.5 cents kind of pricing that Aztec Minerals has fallen to, it's a good entry point for new investors.
Yeah, I appreciate you bringing it onto our radar, and it's definitely something that we follow along with at the KE report because we talk to Simon pretty regularly. But just an interesting thought to think about in the sector when you see a lot of companies doing these financings, there can be an opportunity post-financing for you to capitalize on. And there's also some red flags that you want to watch for if companies are doing that all the time and continually capping their price. But it's a vicious cycle of raising money or not raising money. And so not an easy place to be. There is another company we were talking about that is cashed up doing some work, and it's in Japan. It's Irving Resources, something we've talked to Quentin Henning about on the show before, doing some interesting deeper drilling there. And they also have announced a joint venture between Sumitomo, a Japanese company, and Newmont. At least they have a term sheet on it that they've announced. So be curious to get your thoughts or an update on Irving.
So again, as with Aztec, as with Florida Canyon, I am a big shareholder of Irving Resources. My clients are shareholders of all these companies. Irving has two major projects in Japan. They have a project called Yamagano project near the town of Kagoshima. This was a major gold mine in Japan at one point of time. Over the last 3, 4, 5 decades, they have done no modern exploration work on that project. Newmont did a lot of geological work on the project to assess the size of the blue sky potential of the project. And they are now drilling 5 700-meter holes at the fringe of the project to assess the size of the project and to understand the geological nature of the project. These are diamond rig holes, and they're going down 700 meters. So you can imagine the amount of interest they have in the project because they are going into a joint venture in a completely new country where Sumitomo wants the jurisdiction to be legal jurisdiction for any dispute to be Japan. Newmont wanted to be Australia or the US, and Irving wants that to be Canada. So that is their only clause of difference between the companies. The lawyers are sorting that out where they can actually set up that clause properly. But the term sheet is there. The joint venture is going ahead. It's only a matter of a few weeks before the joint venture agreement is finally signed. But this is a project that they are very excited about. The reason why they are going through so much of legal hassles to put a joint venture in place. Also, Irving has another project in Hokkaido, Omui Mine. And on that project, they have again a term sheet, which is under finalization, which should be announced any day with JX Mining, which is the largest mining company in Japan. So these are the two projects the company has. And this is also a strategy I like, Shad, in which you reduce your risk by joint venturing projects to other companies. In Hokkaido, Irving will be completely free from all expenses because JX Mining will take over all the cost of running the project.
Yeah, I was thinking about that as you were talking about it. We've had a discussion recently about a lot of these joint ventures to move projects forward. One of the ones that came on our radar just a week or two ago was BHP and Lundin Mining combining forces to advance Filo. You think about Nevada Gold Mines, which is Barrick and Newmont working together in Nevada. I was bringing up that in the past, when the Malartic mine was being developed in Canada, that it was actually Yamana and Agnico working it together to get it away from Goldcorp. Do you think that's the wave of the future? More of these joint ventures, more larger producers joint venturing with the junior to make it happen because these juniors can't move it forward on their own typically?
Well, for the moment, that is the way forward because these junior mining companies are so cheap that it does not make sense for these junior mining companies to spend all the money from their own treasuries. They will have to raise so much money from the market that they will dilute their ownership on those projects on per share basis. So it's much better for them under the current situation to joint venture with the bigger companies. And also it gives them a stamp of approval. Once Irving Resources has announced a joint venture with Newmont and Sumitomo, the finalization of it, which should come through, and with JX Mining, the market will accept that as a stamp of approval on the value of the projects.
Yeah, it's a great point. I think Newmont and Sumitomo have a little bit more due diligence capabilities than the average investor. So definitely nice to see the vetting process by the majors when you see them take a stake in these juniors. Anything else you're looking at as far as opportunities in the resource sector? I guess it opened it up to anything. It could be the gold and silver space, could be copper. Anything else catching you on the radar as companies?
I think, Shad, despite that gold has done extremely well over the last 1 year or so, I think there's a lot of scope for improvement left in gold. The world is becoming increasingly chaotic. And after the American elections, irrespective of who wins the election, there will be chaos. And so I think gold is very well supported. And there is, and it's consolidating right now, but gold has a good upside from what I see.
Do you think that eventually filters down into the gold stocks? The reason I ask is with the market selling off so hard, starting with the Japanese markets and then affecting the carry trade in the US. And so it's really hitting all markets. And in a global way, there's nobody really breaking out with big growth. And so the markets are under pressure. Could the gold stocks bifurcate along with gold, or do they get sucked down with the rest of the markets?
Well, they have to improve at the end of the day because increasing gold price should have a positive impact on the junior mining companies. Gold price has already had a good impact on gold mining companies because oil price is stagnant, gold price has moved up, that is increasing their profit margin. Junior minings are still underperforming. I was just looking, Shad, at how well these companies have performed. Over the last 1 year, GDX has gone up by 21%, whereas the venture companies have fallen by 11%. So by that standard, there is a 50% upside in junior mining companies just to match up with mining companies. And I think that's the delta that I'm very interested in. I think junior gold mining companies should go up by 50% at least just to match up with the appreciation that gold mining companies have gone through. But then the continual increase in gold price will have a positive influence across the board on all gold mining companies.
Well, there you have it. Maybe the biggest arbitrage is just the gold juniors catching up to the gold producers and closing that gap over time. I think that's what a lot of people listening are hoping for, and we'll keep following along with it here at the KE Report. Jayant, always great having you on the show to get your thoughts on companies that have your attention and just the general thoughts on the resource sector. Looking forward to our next conversation.
Great. Thank you very much for the opportunity, Shad.